Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Is it prudent to sell in May and go away? Joining us to discuss, we have Steve Sosnick, chief strategist at Interactive Brokers. Steve, I know sell in May and go away is not your favorite market adage. Explain to the audience why and walk us through a couple scenarios in the major averages.
Hi, Jill. Yeah, it actually originated sometime in Middle Age England or Renaissance England, I guess. People noticed that markets tended not to go up in the summer in whatever they were trading, whatever commodities, and it's persisted. There is some evidence that the best 6 months for the stock market for investors is November through April. Those 6 months inclusive, and so therefore you'd want to sell in May and take your profits and move on. November to May, I'm sorry, and there's some underperformance in the other months. Well, we'll see. But seasonality works until it doesn't. It's clearly not working now, and you could see here though that so much of the movement in the market has really been concentrated in a few stocks. I called them the Magnificent Seven a couple of weeks ago. A couple of other people have called it them since. I'm not likely to think I think it's just parallel evolution, because we all know which 7 stocks those are, and those are really the top 50+% of the Nasdaq 100. But we see in the chart that you've got displayed here, the S&P, of which those stocks are over 20%. The S&P cap weighted is greatly outperforming the S&P equal weighted, meaning that it's being dragged up by those stocks that are terrific outperformers. If you take them away, you get some real middling performance in the S&P 500, and those are really powered by the Nasdaq winners that we all know and love right now.
So if we take a look at the 2-year chart here for the S&P versus S&P equal weight, are you seeing the same sort of pattern?
Yeah, I mean, the pattern is very much the case. I'm sorry. I guess the first chart was Nasdaq versus the NDXE. I apologize. And so we see the same pattern. It was much more pronounced with NDXE, where we had, it's really, if you take out those stocks, the index is kind of very sideways. We see the same thing with the S&P. It's very much a pattern that these cap-weighted stocks, which dominate the major market constructions, the only exception really being the Dow, which I like to call random weighted. It's actually a price-weighted index. But these stocks have gotten such huge market cap. Think of NVIDIA hitting $1 trillion market cap. They've really come to dominate much of the market's trading. Actually, with an exception for today, where the Russell 2000, oddly enough, is the best performer.
Steve, let's talk about the debt ceiling for a moment here. We finally got the deal, right? So what does this mean for markets now? Is just one less piece of uncertainty removed?
Absolutely. That, I don't think the markets were particularly troubled by the idea in the first place. We've all gotten used to the idea that we go right up to the edge and then pull back. And, we've seen this movie before. And for the good part of it, we're not going to see it again for another 2 years at least. But I don't think that there's really a, we learned that there really wasn't a desire, among, even the most extreme members of Congress, to sort of do a Thelma and Louise and drive us right over the edge. We pulled back, and the market now, as we see, with volatility measures declining even further, the market, that's one less thing to be concerned about. I actually thought it might have been a little bit of a sell the news type of event, because I was concerned that there would be huge fiscal spending cuts, but there really weren't. They're spread out over years and years, and so the market can really look past them. And so, yes, it was about as good of a result from a market point of view as you could have. And we can, as we can see, because we're getting a relief rally, even though we weren't too perturbed in the first place.
All right, Steve, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.